Welcome back. You're still tuned into Halftime Report on CNBC-TV18. Well, let's discuss the big event for today. Reliance Industries will be holding its 47th annual general meeting 2 p.m. onwards this afternoon. Investors await concrete plans for the Jio and retail IPOs. Updates on the new energy projects and Jio's 5G monetization will be keenly watched out for. To discuss this and the state of the markets as well, we have Ashi Anand, CEO and founder at IME Capital, who's joining in now. Ashi, hi, welcome to the show. Well, if you could just start by giving us a sense in terms of what your key expectation is from the Reliance AGM and what would probably be the most market or stock moving according to you.
Sure, perfect. First of all, thank you. Thanks for having me on this show. So I think in terms of market expectations around the Reliance AGM, and the Reliance AGM is probably one of the most watched AGMs in the Indian corporate landscape, given the kind of tendency for certain big bang announcements. So if we're really looking at this year's AGM, I think what we're really focusing on is there have been certain important announcements made in previous AGMs. So in 2019, for example, they spoke about potential listing, both of Jio and the retail business over a 5-year period. So you're kind of coming towards the end of that. You have seen certain progress or certain indicators of possibly getting prepared for listing. So if you're looking at the retail business, you have seen accelerated payback of loans. You have seen ESOPs for senior employees. So I think a very, very important and possibly the biggest market moving element here is going to be any kind of update about potential listing of both the retail and the Jio business. Now, apart from this very important corporate event, I think markets are also going to be focused on what's happening on the new energy business. It's something which could potentially add a lot of value, but is obviously in very nascent stages. 2011 is when they really announced this, and they had spoken about a $10 billion investment over 3 years with longer-term plans of setting up 100 gigawatts across fuel cells, hydrogen, battery, and other renewable segments. Now, any progress in terms of what is happening around these new energy initiatives, because that really helps in terms of the longer-term transition away from the petrochem business towards newer energy. So this is, again, something which is going to be closely watched for, just in terms of updates on plans, but probably corporate actions around the listing is something which is probably the focus of the market. I think apart from these two key elements, you're also going to be looking at any indications of a possible merger of Disney into Reliance's media business, as well as other updates that may happen on Jio financials.
All right, hi Ashi. Good day and good to see you, Ben. So we have got that in terms of expectations. Have neatly summed that up. So that's about Reliance, and in the next 2 hours we'll know, from the management itself. Let's focus on market then. How are you feeling right now? The way we have rallied, the feeling particularly about the broader markets is a little bit uncomfortable. The select stocks have moved up. How do you view this? If you're allocating fresh money right now, how much of it would be to the large cap space as well as the mid cap space? Because you got instances from the SME market, select F&O stocks, which are not very comfortable.
So actually, we are fairly comfortable, right? And I think a lot of that is based on where we are positioned in terms of our portfolios. So if you're looking at the broader market construct, I think we are very, very positive for growth over the coming decade. India is really just shining from an overall global perspective. Our economy's growth potential over the coming decade is just heads and shoulders over everyone else. Now, if you're looking at the whole, and this is something which leads us to be very positive from a longer-term growth perspective, you are going into next month likely to see a start of an interest rate reduction cycle, especially in terms of the US Fed. So this is actually an important kind of a tailwind for the market that we do see actually emerging. I think when you're looking at valuations, you have to look at it in the context of the underlying growth story and the underlying quality. And both of that for India has really improved substantially over the last 3 or 4 years, with multiple new drivers of growth coming in. Now, when I said we are fairly comfortable in terms of our positioning and we're very comfortable from an overall market perspective, is because our portfolios are a lot more tilted towards large and mid caps. There are certain pockets of the market, this would namely be small caps, possibly for specific sectors. And I think the MSME exchange for sure There are pockets where there is clear irrational exuberance, there are clear excesses. But the moment you get out of those segments, right, and you look at the broader markets, look at certain large caps, there are still, even at current levels, enough areas where we are seeing value with growth and kind of overall quality. So I think we are fairly comfortably poised.
Okay. Just wanted to come back to the RIL AGM and just had a question with regards to the IPOs. What, according to you, is the timeline when it comes to the Jio as well as the retail IPO? And what would you like to hear in that context? Would it just be a timeline? Are you expecting to probably have a decisive kind of date?
We'll know the answer, right, in a couple of hours. I think even if you get some sense of an update in a timeline, right, because this is something which clearly people have been expecting, we are very close to the kind of timelines given a few years back. Even if they do give some kind of an indication around is it happening this year or the next year, right? That itself will be something I think which will give markets a reasonable amount of clarity. I'm fairly sure they won't come out with a specific date. In our assessment, it seems like Reliance Retail is a little more further along the road, just based on certain kind of actions taken at the company level that seem to be in preparation for an IPO. So even if you just get broad indications that Reliance Retail will happen this year, Jio will happen either this year or next year, it will be something to give markets clear visibility in terms of what's happening. Specific dates, I would doubt would be announced.
Okay, all right. So let's talk about then themes that you like. I think you're positioned more towards defensives, I believe. Could you tell us what all is on your radar and what you like at current reckoning?
No, so not really. I think we are quite balanced. So if you go back about 4 or 5 months back, we were quite heavily tilted towards cross capital formation. So various parts of the market that were doing reasonably well. So we had large exposures in real estate, in capital goods, and that part, right, and including defense. And those exposures really helped us last year in terms of outperforming overall markets on a large and mid-cap strategy. What we have done going into the current year is a lot of the weightages that we had in some of these segments had actually moved up quite substantially. So we have trimmed we've basically done partial profit booking, got down these exposures to what they were at the start when we may have initiated positions. And some of this has kind of gotten reallocated towards consumption, a certain amount of banking, etc. So I think we are quite well balanced from a portfolio perspective in terms of segments where there is momentum. So this would be a real estate, capital goods, capital marketplace, etc., as well as kind of segments which haven't really performed and where we are seeing some kind of revival. So consumption is something where we've increased weights recently. BFSI, especially banking, is a space where I think the combination of growth, quality, and value is really quite comfortable. So I don't think we've gone defensive per se. It's just kind of, I think we're well balanced in terms of both of these segments of the market. But it is very clearly positioned towards large and mid caps. We are staying away from heavy small cap exposures.
Okay, all right. Just staying away from small cap exposures. But Ashi, IT seems to have come back. There's a lot of optimism now that the Fed could be on a rate cutting cycle. So how would you approach IT from these current levels, and how much does it probably comprise of in terms of your portfolio right now?
So IT, we are still underweight, but we are marginally kind of underweight. I think what you are seeing in IT is that for a couple of years, this has clearly not moved, right? And there is clear potential for a catch-up rally. There is a certain amount of excitement happening around the fact that once the US Fed starts reducing rates, that could signal an improvement in economic outlook and therefore increase IT spends. At least as of right now, these are kind of expectations. There isn't enough on the ground visibility of this happening. So we've just kind of gone past the recent results season. And if you saw the recent results, while has been an improvement in the BFSI outlook, overall kind of guidances in terms of organic growth are still in the kind of low single digits. Now, that is something which, according to us, is enough for some kind of a smaller trading pop. But in order for IT to have a more sustained run, you need this kind of combination of reduced interest rates and an improvement in economic outlook, leading to organic growth outlooks moving a little higher. You need at least a 3-4% delta happening there. And I think until that happens, we'd probably be neutral to slightly underweight in IT and not have a very large position. That said, I think it has underperformed for quite a long time. Various parts of the market, as in you are in this kind of phase where you are seeing some rebalancing of the overall market momentum towards segments which haven't performed, and IT could actually clearly do well there.
Okay, all right, Ashi, it's been a pleasure speaking with you. Thanks very much for joining in and talking to us and giving us your perspective. So that's the word coming in with regards to the markets. As of now, the mid-cap index has recovered a tad bit from the day's low, but still under pressure, so down around 0.7% as we speak. We'll take a short break, but up next, full tilt on the markets. Apurva Seth, head research at Samco Securities, will join in with some trading calls.